Right, welcome to another run through of the top 5 charts of the week. This is the free email that goes out to subscribers of the website, and the purpose of this video is to basically go through the 5 charts. Here we are, and add a little bit of extra comment and context. So we'll start off with number 1 here, which is showing you the combined market and official manufacturing PMIs for both China and USA, because both of those countries have both their own PMI and a PMI done by market. And sometimes they do say very different things, but oftentimes the trend is more or less consistent. And the trend here is that America is running along, just ticking along at a solid pace, very strong at the moment, judging by the PMIs. In China, you can see clear loss of momentum there, softening of the economy, and it's really just borderline in terms of whether it's an expansion or contraction, at the 50-point mark there. Frankly, I'd give it I wouldn't give it the benefit of the doubt. I'd say that it's probably actually worse than that. And in any event, we've seen basically a divergence there, and that's something I've been talking about for a bit, and really won't say much more because the next chart kind of brings us into the sort of the implications, or a bit more comments around the China PMI there. So you can see here, this is the Economic Policy Uncertainty Index. This is the index based on the occurrence of words and phrases in the news that would indicate economic policy uncertainty. You can see here it's at the second highest reading ever, and this is because, as I've noted here, cyclical headwinds, which we saw in this chart, political cross currents, so the trade war and various other issues there, and structural challenges like the amount of debt that they've got, the housing market, need to sort of restructure to more sustainable economic footing, more consumer-oriented economy, etc. And the tension actually between the structural and the cyclical. But the silver lining here is that the other aspect is the stimulus, because when you see China's economy slow down like this, typically you get a stimulus package or a stimulus response. I'd say that it's probably not bad enough yet to trigger off a really big bang stimulus package, and perhaps a lot of that will actually depend on what happens with this tentative truce in the trade war. I mean, if they come up with some full-scale resolution, then they might even be of the view that they don't need to do anything anymore, and that as a result of that, things will be fine. Whereas if they don't come to a deal and the tariffs increase, then that could actually be, rather than a negative for China, it could actually be the biggest positive, because it would trigger the policymakers to undertake more forceful stimulus measures. Now, speaking of trade, this is one that I thought was quite interesting. So the red line here, we'll kind of just focus on the red line actually, and that's the seasonally and working day adjusted global container throughput index. And you can see there, up until October, so it's the October reading there, global trade had actually been stagnating. I mean, it'd just been going sideways, back to trend there, and now actually in October it's made its first new high since January. And it's quite an interesting observation, really, because if you think about what's been going on in markets made their last new high in January. And so the question here is going to be whether markets decide to follow the lead of global trade and go on to make a new high. I'll leave that as an open question for now. Now this one, really interesting. This one I'm going to be doing a bit more work on for in the weekly report that I put out tomorrow. So this is Asian Currency Index, my own one. It's based on 10 Asian currencies against the US dollar equal weighted. And you can see here that we've had a clear establishment of a pretty meaningful support level here. So we've got a, not quite reaching it in late 15, but touching there in early 2016 when we had that big correction in EM commodities, Asia, etc. And then again in early 2017, and then through the EM Asia route that we've seen pretty solid bear market really across Asian and EM assets. And now we've had a decent bounce off that support level. And one thing that I've been working on is the breadth of this index, and the breadth has just been exploding from completely oversold levels. So I think this is a really interesting chart because this could be the bottom here, and we're going to get a test pretty soon. That blue line's the 200-day moving average, so that's going to be a sort of a short-term test to see whether that that rally or that rebound can stick. If that rebound can stick and we do get a sort of more sustained rally there, I think that that could be a key sign for Asian and emerging market equities, which have both been bid up a lot and both are looking very cheap at this point. Last one, the Reflation trade capitulation. This is showing you basically positioning indicator for the Reflation trade. It's based on futures positioning in crude oil, copper, equities, and treasuries and US dollar. Both of those last ones inverted to sort of align with the signal. And yeah, been basically a 180-degree flip, and we're seeing this across a lot of different things. I can think of at least a dozen different indicators across economics, economic surprise, sentiment, volatility, valuations. Going into the end of 2017, basically the mood or the indicators were basically showing accelerating synchronized growth, complacent low volatility, high valuations, solid positive economic surprises, a lot of earnings upgrades. Pretty much everything that could go right was going right, and arguably most people entered 2018 off the back of that with too much optimism. And now at the end of 2018, a lot of those things have actually completely flipped around, and so I've got fear, panic, negative sentiment, negative economic surprises, falling earnings momentum. Basically everything's gone wrong, and so the risk or the possibility is that we, on the back of that, end up going into 2019 too pessimistic. And I think that that is a sort of a really something to be considering heavily as we enter the new year. I'm about to write up my end of year special report, so keep an eye out for that, where I will actually go into that. We'll have a look at it in a bit more detail, because there's a lot of moving parts out there, and it's definitely not a time to be complacent or overly bearish or overly bullish. So we'll leave it at that, and if you've got any comments, questions, put in the comment section of the YouTube video. Otherwise, subscribe to the channel so you don't miss out on any updates. And finally, if you want to receive this email straight to your inbox, you can click the link to this, and there's a subscribe button up in the top left corner, and you can just click that.